For me, it's about education, right? The most important thing to have, and that's why I appreciate Positive Real Estate.
Oh, thank you.
Because, you need to be educated, and education is the key with investing. You can't make decisions with shut eyes, not understanding and knowing what you do. You need to be informed. And I think you guys are doing a brilliant job.
You're listening to Property Investor Tales, stories from the front yard. Here's your host, Tabitha Bright.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright and I'm the head of coaching at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guests today are Agatha Lorden and Warwick Morland. Look, and today we're going to cover, their amazing results of holding property for 20 years and longer, why Agatha got her truck license, and what it took to trade their jobs for traveling the world. So enjoy this conversation with Agatha and Warwick. Hey, Agatha and Warwick, welcome today to the podcast.
Hello, Tab. It's great to be here.
Oh, it's awesome having you.
Thank you.
So,
Warwick, you look like you want to say something.
I want to say something. It's awesome being here too. I've never done this before.
Oh, no, it's really appreciated. I was actually super excited about this particular episode because this one's a little bit different because you guys are at a different stage of your investing. So many of our clients that I've talked to so far and the investors that I've talked to have largely been in acquisitions phase, or they've finished buying property, but their properties haven't held them long enough for them to be able to take that next step, which you guys are currently on. So tell me a little bit about that. Tell me, when did you first start investing? Did you start investing together or you had properties individually? Tell me a little bit about that journey.
Yes. You want to go?
So we had properties individually. I started, let's say, if I want to say investing, I did my first development back in about 1985, which was dual occupancy. That was a extreme learning curve. No information about it. And we bought investing off and on. I met Agatha in 2003.
Yep.
You already had
I had my own portfolio, yes. In 1980, I have redeveloped the site in South Yarra, so subdivided the land and created 2 townhouses.
Wow.
So my background is in architectural industry, so I've been in building industry, so I guess I had that confidence to go ahead. But
that's awesome.
Still, there's a lot of headaches, obviously getting planning permits, working with builders and so on and so forth. But it was a very successful project at the end of the day. So I'm very pleased with that.
And so tell me, do either of you still hold any of those properties still from 1980s? You do?
Yes, we do. Yeah.
No, sorry, no. I
One.
don't hold the 1980s property. I sold that.
Yep.
Bought another property.
Yep.
Still has her property in South Yarra.
Wonderful. And so can I ask, we often say to clients that have bought property and they've held it 3, 4, 5 years and they get frustrated. Holding property 20, 30 plus years, obviously there's been some great results in that, simply not only with the development, but simply by holding. What would you have bought for in the 1980s in South Yarra?
200,000.
And I hate to even, begin to imagine what that might be worth today, but well into $1 million, 2 million?
Yeah.
Yep, somewhere around there.
But sorry, just correction. I did not purchase that property in 80s. I redeveloped it in 80s. So I actually bought it 10 years before that.
Oh my goodness.
Yeah, that's what it was. It was my family home essentially.
So you guys have really done the hard yards, holding property for long periods of time. And I imagine that some of your feedback for people that was struggling in that sort of 3 to 5 year time frame, getting frustrated, your advice would be?
No, you need to wait. It's all about supply and demand, and Australia's population growing all the time. The outer suburbs, which were, say, Blackburn and Nuttawading, are no longer outer suburbs. They're little ring suburbs, and your outer suburbs are way out to Lilydale now.
Yeah.
So that's all what's changes in time.
But it's also looking at the entire portfolio and really knowing which ones need to be sold and which ones need to be kept. We have acquired, the last acquisition was Wenwarwick. So we're constantly reviewing the portfolio. When was the last one? It
was probably 2011.
So we're constantly looking at it, reviewing it, and seeing which one work and which one don't work for us. And particularly now in this stage where we are no longer in acquisitions, really, we've moved into a consolidation stage.
And retirement planning.
Know which one we keep the best, keep the rest, sell off the rest.
And sorry, Warwick.
Time, you've got to let time run its course, have the properties work. I've looked at properties in 1983 in Port Melbourne. I turned down a property for $29,000. Thought it was too dear. I'm not going to buy that.
29,000. Oh my God. Imagine today you'd be like, I only have like 30 of those.
Yeah, that's right. Buy it on the bank card.
That's nuts.
That's a perspective people have got to get into. The prices will change. What you're doing now, your income now, what you're paying off will change over time. And you look back and say, wow, I only bought that for whatever it was.
But here's the key thing, though, that we need to clarify, that if you do keep the properties for a long period of time, like we do, every 10 years, you need to do something. So you need to set aside money and time.
Awesome.
And you need to bring it up to a specific standard, which is, beyond to even what's happening then, to make it kind of, ahead of yourself and make it better to what it is.
Which is an interesting point you make. So, one of the things that we were talking about before we started recording the podcast was you guys are looking at selling something in your portfolio at the moment. Do you want to tell us a little bit about that, about Vermont, and why you're selling it? Because it's a property that's performed for you, right? It's done well. Yeah.
Oh, extremely well.
Yeah. So tell me about that.
Well, it's a classic suburban property. Quarter-acre block of land. It's a house. It's a mixture of brick and weatherboard.
Yep.
It's got a lovely view, but it's got a huge garden, and it needs a lot of gardening. Plus, the house is made of wood, and those properties were built back in the 70s and 80s. They didn't have all the technology you have today. You didn't have treated pine. So all that wood is starting to wear out.
Right.
It's fair enough. It wasn't designed to last that long.
Yeah.
And so we've got to make that decision. Do we try and build this property back up to scratch, put all the right materials in? And that's extremely expensive. You're talking about changing all the windows, changing all the decks. And with other things that come in, like these new tenancy laws in Victoria, where you've got safety issues, the switchboard will have to be changed. That's the old style switchboard.
Yeah.
So lots and lots of money. You could put it in and bring it back up to scratch, but it's not the type of property is suited for renting out. There's too much gardening work to be done, and it falls behind. It becomes the worst house in the street. Virtually.
Right, because Agatha, you were saying that tenants aren't great at garden upkeep. We all know that.
No, people are busy. Usually you've got family or young people working full time. So to maintain a garden, you can't rely on tenants.
Yeah.
So we've got, beautiful trees, but they grow and they become monsters. So we had a jungle when we got back.
Yeah.
So
Okay.
nothing's been done for about 6 years.
12 years, actually. It's
well,
12 years.
Well, we did 6 years. We did bathrooms and kitchen in
Yeah.
this particular house. But the garden just, let go. So people just maintained a small part of it, but the rest of it was in a complete, you couldn't even see the house from the street. So it was that bad.
Right.
So here comes Warwick with his chainsaw, cutting all the trees. And so we've got now, we've got to the stage where we've got a brand new garden. And I think, so this is the key thing that I wanted to point out. It's knowing what to do to create the biggest impact. So not to overcapitalize and do everything, but just having those kind of few features here and there, and knowing where to work and what to do rather than do everything.
Right. Sorry, Warwick.
We're going to move to Queensland to retire permanently in a few years' time. We're not going to be coming down here every 5 years or every year to maintain a property.
Pull the chainsaw out.
It's too hard. It's too much, too limiting in the lifestyle.
It is.
And that's not the objective of having investments. You want them to be doing their thing and providing them with the income to live out the lifestyle we want.
That's right. Who wants to, chop the ivy that's overgrowing the whole garden every 3 years? Thank you very much. Not me.
And it's not our ivy, it's the neighbour's ivy.
Oh, okay.
All 3 fences.
Right. So one of your top tips is low maintenance property that yields really well and attracts good quality tenants in areas, I'm guessing, that still have strong capital growth and all of that kind of stuff. So townhouses, apartment stock, good quality property that will not cause you too much grief, because you don't want to spend all your time or the cost of a garden maintenance if you're not as handy with the skills, the chainsaw as Warwick is perhaps.
Yeah.
And can I change tack a little bit? You recently bought a truck of some sorts.
Yes. Black Betty. It's a 7-ton truck. I had to get a truck license. So technically.
Which is awesome.
So this is our lifestyle. We travel in between times. When we renovate, we actually travel. So it's our mobile home.
That's so good.
It's pretty big. So this truck is our upgrade. It has everything. It's got kitchen, bathroom, washing machine, and microwave, oven, and everything else. So very comfortable, and 4-wheel drive.
And it's 4-wheel drive. So it's a mini house. So we're going to live in that and travel, and we could be living in that and traveling for years. So we need to have properties that are low maintenance, have good property managers that are on the ball all the time, having the right team of maintenance people as well. And that's the other key, is having good property management.
Yes, the good agent, I think that they know the area, they know the market, obviously, but they've got good team of maintenance people. I think that's the key, that it needs to be some kind of a backup to maintain the property. And alert us when that needs to be done. Because
things break down. Hot water systems, they only last 10 years. Air conditioning systems, we had one that lasted 4 years.
Oh,
$4,000 to replace. I was having a phone call from Port Lincoln in South Australia trying to fix an air conditioner in Queensland. Arrange a specialist air conditioning group to come and fix it.
Yeah, okay. Yeah. So I'm hearing low maintenance, like from the rooftops, and good quality and good tenants, because that just makes it easy to do the stuff you want to do. Now, neither of you are, I'll say, working in employed jobs at the moment, are you? You're working, doing maintenance on your properties, getting them all up to speed, and all of that, but you're not in paid employment, are you?
No, we don't need to be in paid employment.
That's awesome.
No, but I have a fun job. I teach online. I teach English in China. So that's my weekend job that's portable. So when we travel in our camper van, I still teach just weekends. So that's what I can do.
That's really cool.
And we do volunteer work. We've done volunteer work around Australia and travels. different places. Might be for a week, it might be for 2 months. We do volunteer work. We've
That's
done
amazing.
volunteer work overseas, Myanmar. We spent 2 months in Myanmar.
Wow.
Because we were designing a school, did the planning.
The master plan, yeah,
in
that's right.
a village that was just bamboo huts, and we had to measure out the site, kick pigs out of the way, and mosquitoes, snakes, and everything.
Snakes, oh, horrible.
But because we've developed a lot of skills, like everyone else, we've developed a lot of skills in our working life, and it's we want to still use those
They're
skills.
transferable, that's right.
And use them for volunteer work. So it's a shame to give up all those skills you've learnt.
Yeah, that's amazing. And because I was first kind of alerted to you guys and your big change of scenery, shall we call it, when I saw you were on a boat, a yacht. What's the right term? I'm not sea.
A big catamaran, yes. We took the catamaran, we sailed through the Caribbean islands. So that was for about 3 months, I think.
That was amazing.
Yeah, we kind of grab opportunities left, right, and centre and spice up life, basically, to do something different.
Yeah, and I mean, obviously, this was all pre-COVID, and so every time I looked on Facebook, you guys were somewhere else. You were through, if I remember rightly, through South America, through. Yeah. And how do you deal with what I'll call the gypsy lifestyle? Like, I know some people are like, oh, yeah, but I've got my cat, I've got my, I don't want to give up X, Y, Z. Tell me about that, because there are trade-offs, right?
Absolutely. There are big trade-offs. So the biggest one is we let go of possessions, of things. Everything that I own fits in a camper van, which is like, 3 meters by 2 meters little box.
That's nice.
And so, no cat. The cat died, in fact, when we started to travel. The cat died. My daughter moved out of the family home. We've Warwick. Warwick put up his hand to Ive. So he was the first one. So things happened. And then we thought, okay, let's travel. So when Warwick said that, let's travel, I was still working, and I thought, how can I part with the job that I love, interior design and architecture. So I thought, okay, Warwick, here's the deal. I'll give you a year, and then we'll sit down, talk again. You know what? From that day on, I'll never look back. It's just the best lifestyle, but we don't have possessions, and we do move from A to B to C. We're very flexible.
Yeah.
But some days I wake up, I don't know where I am. Days we're in a different place, like you're saying.
But the key to all that, though, we also rented our house out. So we have no place to come back to. So we don't have the pets, we don't have the garden.
Yeah.
Tenants have got all that. So it gives us the flexibility. We were in the Caribbean, and then that finished, and we decided what to do next. And we started traveling. We were away for a year and a half because we didn't have to come back home.
Yeah.
We didn't actually have a home. It was rented out.
That's pretty cool.
For our travels.
Home is wherever we are at the time. So it's a different concept of home.
Yeah. So it doesn't suit everyone. Most people like to have their house and then go away for a couple of months, then come back.
And don't get me wrong, I would love to have a cat and dog, but this is the trade-off.
Yeah, that's your trade-off. Any other trade-offs? What's been the hardest thing? What's been the hardest thing? Because, I think everyone can imagine all the awesome stuff that goes along with this, but what's the hardest thing? What did you struggle with?
For me, it's friends and family. When we are away and we're traveling, you don't have that physical contact. So, Zoom is my friend. But it is all electronic. I have electronic relationship with my daughter. Hello, darling. How are you? Oh, I'm well. How are you, Mum? Fine. Bye.
Yeah.
There is none of that. So we got, 10-minute, half an hour friends wherever we go. And those friendships do kind of, they are there, but they're all electronic. But that's our sort of way of life.
Interesting.
That's hard sometimes.
And it's also living a simpler life. Like travels around the world, you've only got a 20 kilo suitcase.
Yeah.
That's 2 of it. So it's only 40 kilos. That's your whole living is 40 kilos for a year and a half. But it's all, we see it as adventure. You've got to be flexible. You've got to be ready for something to change. You've got to be fluid with where you're going next. Because things change. So it's giving up friends. But one of the things, key things here is I sat down with all of our property portfolio, worked out all our income, all our outgoings, and a projection for each year, what we get from income and what our expenses would be. And 3 years in a row, they were exactly the same. So we worked out we were living on around $65,000 a year. Travels, and our income was more than that. It was exactly what I worked out in advance from our property portfolio. And Jason says property is very consistent in income, and this is it. It's consistent. Okay, you allow for maintenance and other things in the figures, but it is pretty consistent.
And here's the key. It's that, Warwick is a spreadsheet man. He's got a spreadsheet for every activity in life. But I tell you what, with the property portfolio, you need to know where you are. So, each property has got, all the figures, so we know where we stand and we know what we need to do basically. With
that's awesome.
Track of all, spreadsheets and all the.
And you need to know what your expenses are. A lot of people don't even want to look at it. I don't want to know what my expenses are. So many people tell me that. And we sat down, we wrote everything down, what we spent it on for a year, and it pinpointed where we were spending all our money, where we were saving money, and how we could live the lifestyle we're living. So that's a key, is to really look seriously at where you spend your money. And you could be buying 2 many cups of coffee, but you could be paying off another house.
Did I tell you that one of mine that I looked at all my expenses over a year, like you said, and because then it puts it into one big chunk, and you can see all that micro detail suddenly becomes something tangible. I worked out we were spending $7,000 a year on takeaway coffee between Vin and I.
Yeah, easy.
7,000. So we went out and bought a coffee machine and saved ourselves half of that. But even so, it's a silly amount. You've got to make conscious decisions about your spending. There's an awesome documentary on Netflix called The Minimalists. Have you seen those guys? Well, they're very similar to what you guys do. They talk about, it's not about not having rewards in life, but it's about being really conscious with what you choose and where you spend your money and understanding what you're spending. And it's fascinating. So I've been trying to implement a little bit of that into my life. So it's not that unconscious, just consuming.
Yes.
And I think that's what I love about what you guys are doing.
Yeah, it's definitely that. And Marie Kondo is my guru. Minimalism is exactly the thing. It's my path. And I'm loving it because there is a freedom with it, Tab.
I was going to say there's a shedding, isn't there?
You don't need to maintain your 100 pair of shoes and, whatever else. There is freedom, and you're actually free to do whatever you want to do. And I think our thing is the focus. It's not that we're missing something in life. No. We've got a very clear path. We know what we're passionate about. We love travel. I love teaching English overseas, and it's about gathering experiences and not material things.
That's awesome. So I guess last question, if you were to meet your younger self, what advice, it's that classic podcast question, what advice or what would you say to yourself? Is there anything that you would say to you, young Warwick, young Agatha?
Yes, for me, it's about education, right? The most important thing, Tab, and that's why I appreciate Positive Real Estate.
Oh, thank you.
Because, you need to be educated, and education is the key with investment. you can't make decisions with shut eyes, not understanding and knowing what you do. You need to be informed. And I think you guys are doing a brilliant job.
Oh, thank you.
That's the same here. It's education. Go out, young people, go out, get educated about property, the various properties you can invest in, the various ways of getting income from property, what your end goal is, what you're trying to achieve out of all that. So you've got to focus. Too many people I speak to say, I bought an investment property. I said, why? Oh, because I wanted to buy one. What was your strategy? Be my strategy.
You guys want a job? I know you don't want a job, but do you want a job?
But yeah, it's all about education. After we'd been at Positive Real Estate for 6 months, we realised that half the properties we bought were probably a very poor decision. And I think it was another question. You had someone who was very scared of making the wrong decision. My first deal, I said actually physically buy an investment property, was a friend of mine from work came and said, look, my accountant said there's a good deal here on this resort, buying an apartment in this resort in South Australia. And I said, oh yeah. So we sat down and did that spreadsheet of the numbers and did worst case and best case scenario. And even in worst case, it still looked reasonably good. And then we went out and trotted off and bought it, and knowing nothing about them.
I feel there's a but coming.
The worst problem was it was even worse than the worst case scenario.
Right.
So it was a property that was really a commercial type property where its value is only based on its income.
Oh yes. Okay.
Almost zero.
Yeah. So cap rate.
That property is. I still own that property. I've had it for 20 years. Yeah, well, it was also a very complex structure on how to buy and sell it. And only 2 weeks ago, I received an email saying that they're getting the lawyers together so that they can change the structure so people can actually buy and sell them. And this is 20 years on, and I'd say it's still not worth, I couldn't sell it for what I paid for it 20 years on.
20 years on, my goodness.
But the learning here, this is the people make a mistake. That property gives me a 9% net return.
Oh, okay.
Which 20 years on, you tell me where I can get a 9% return on anyone
after expenses,
the stock market.
Yeah, but you waited a long time.
Waited a long time. So it has come good, but it took 10 years before it started showing a profit. I didn't even want to read the monthly statement.
Tough.
It's a very complex activity, and I love your guest speakers that you invite every month. It's the bankers, it's the real estate people, it's the it's just it's very complex. So
you even had a good one on what do you call it? Body corporates, which I missed.
Yeah.
Oh yes,
Kerry. Problems with body corporates too.
Yeah.
But yeah, anyway, making the wrong decision. I think once you've got good education with Positive Real Estate or whoever you're with, it's probably not going to be a wrong decision. It's like the quality of the decision. Could I have made a better decision?
Won't be disaster.
I think this decision is still going to be a reasonably good decision. But property is one of those things where you look back in 5 years and say, oh, I should have bought this, I should have bought that. In 20 years' time, I should have bought that for 29.
Hindsight, eh?
Yeah.
30 in Port Melbourne.
Yeah, that's right. We've got to buy there.
Funny, isn't it?
Oh, one of the questions was, what do our friends think about property development? Investment, sorry.
Oh, yes.
We don't discuss it with our friends because they're not property investors. And I'm quite happy to discuss our property investing with other investors, but not with people who are not investors, because people assume you've got 1 property, 5, 10 properties, whatever it is, and they're all fully paid for, and you're a rich person, you've got all these fully paid for properties. And it's
not like that.
It's not like that at all. You're trying to get the next bit of cash flow to buy the next one because you've zeroed out on cash flow the whole time.
Yeah.
And so
it is true.
That's why I love coming to the Positive Real Estate meetings when they hopefully come back on.
we'll pressure Jace.
Because you can walk around and chat with people. And
the people, the community. It's so good because you can chat to people and they tell you what they've done and they, sharing mistakes and joys.
Yeah. Pick up so many tips and sitting there and you become you can get a mindset, I can only buy this type of property. But when you go to those meetings and people are doing some weird development out somewhere or some other thing, and you go, wow, that's I'm going to go and talk to them. I do it, but I'd like to know about it. That's the beauty I found of going to those group meetings where you can just listen and just get you motivated and thinking, okay, there's more to it than just buying a unit in whatever it is.
Yeah, it's true. I think part of what I've loved about this journey is just talking to the myriad of different people from all walks of life. Because, we end up in our own little tribe and our own little bubble often. And if you're not putting yourself out there, I mean, you guys are amazing in how you do. But if you're not, because life's busy, job, family, all of that stage that, people inevitably go through, it's just interesting meeting people from every age, every demographic, multiple cultures, multiple experiences. And I think that's part of what makes the positive stuff pretty special.
It is. Absolutely.
Also, with property investing, everywhere we go, we always look at property. We always look at the property. We talk about property, look at things, but look at it in a different light. Most people go down somewhere and they look at properties and, I'd like to buy that. We look at it and go, what could we actually do with that? Does it give us a return?
Yeah.
Lessons learned.
And that's not here. That's in overseas.
Hang on.
We go overseas as well.
But never buy property while you're on holidays. One tip I forgot to mention.
Why is that?
Port Douglas.
What was that?
No, don't buy properties when you're on holidays.
Oh, Port Douglas, did you say?
Yes.
Yeah.
Oh. You got swept away by the romance of it, I take.
Yes, that's right.
Yes,
that's
but you know what? It turns around because, we've done 360 degrees. We bought it. It wasn't financially. It wasn't a good decision. The body corps, what is it? The
body corp.
The body corp costs just killed it.
Yeah,
it's not a financial investment, but for us, it was always a retirement place. And you know what? We got stuck there in the nicest possible way for 7 months, and we actually love it. So our plans are to retire there because now we've tested as to what's it like to live there in the most of the heat. So that was a good.
Yeah. So we've decided, yes, we do want to live there. Finally, retire there once we finish travelling.
Yeah.
And but that property is a classic where we bought it. You've got a similar property where it's a holiday sort of area property, and it was almost at its peak. So for the next 16 years, it did nothing. It went back.
Yeah, that's the problem, isn't it, with those holiday places?
And post-COVID, they've actually gone up in price over 16 years. But we're not selling.
You don't want to live there once.
But we've had 16 years of maintenance to pay for.
Yeah. Oh, yeah.
So that's another thing, buying a property. I have to buy it now in case the prices go up. Well, no, don't do that. If you want to live there, don't buy it now in case the prices go up. It may not go up, and you're stuck with a property that's doing nothing.
Yeah. It's back to the numbers, eh? Back to the numbers.
Yeah.
Spreadsheets.
I don't like them, but they're necessary.
They are necessary.
Right?
100%.
But Warwick's the man. So I think, and that's the thing about us, his got amazing strengths. This man is really amazing. And my set of skills is very different to Warwick. And so we kind of, and it works for us. We have a lot of heated discussions, but it really works to our advantage.
That's awesome.
With the renos, because and he brings, because he's an engineer, he brings different skills to the project. He's a fix-it man and how to do it. and I'm like, this is going to look good, and that's going to cost like 10 cents. So I'm a bargain queen and try to get the cheapest way of something that looks great, and it's a wow factor kind of thing. So that's and Warwick does it.
Yeah.
Very good. So match made in heaven. We got the interiors and the
project management and building.
Building and engineering. Awesome. Awesome. All righty. Well, thank you so much, guys. And what have you got on?
I'd love to see this podcast, so let us know.
Oh, yes.
When it's coming up, and because I love podcasts.
Hey, sorry.
I said before, the PRE has evolved since we first joined PRE.
Yeah, massively.
Years under your belt, a lot more property sales, property developments, and the things you're getting into, like Jason the other day was talking about, putting money into that investment in Queensland. You might get 10%, so it's a straight cash thing. You're not actually buying the property.
Yeah,
and that's a good thing. That's I started getting interested in that one. I should have some cash coming up soon.
Awesome.
And, so, and the thing is also keeping focused on your property.
Yeah.
Investing, because you can easily get sidetracked with the next whiz thing that's come out. You could be busy spending all your time now looking at Bitcoin, trying to make.
Yeah, I was going to say crypto.
Cryptocurrency, or it could be the stock market. All those are distractions from what you really are trying to achieve. Really focus on property being your vehicle to get where you want to go.
Yeah, it's interesting, isn't it? All the bright, shiny objects that can so easily take your focus away.
The other last thing I want to talk about is having an exit trigger.
Yes.
Oh yeah, tell me about that.
Yes.
What would it be with your property that would have you make a decision to sell it? And that could be in Queensland. I bought a property out in Emerald, and I said, if any of those mines close down, those coal mines, I'll sell. That was my trigger.
Yeah.
And friend convinced me, no, it's only a temporary thing. Well, I should have just sold. That was my trigger. I should have stuck to it and sold. And it could be redevelopment. The council's redeveloping the area, and there's a massive block of units like those ones in South Yarra on the corner.
Yep.
They've got all those apartment buildings. They must be having a big impact on property in South Yarra, especially apartments.
Yeah, I've actually got a friend of mine that bought one.
Yep.
Oh, right.
Yeah. Totally not related to positive real estate. She's one of my running buddies, and I went up and had a look at her apartment, and it's got lovely views, but it's a big block, and a lot of Airbnb in there, which is driving people around the bend, I think. Yeah.
That's another issue. Yeah. And even climate change. We're talking about properties now. Climate change is a big issue on any property, I suppose. It's close to the coast.
Yep.
20 years ago, who thought about climate change? Oh, it'll fix itself. No impact.
Yeah, you just didn't want to be too close to a cliff.
Yeah, that's right. Yeah. So although having an exit, sitting down, it might be the government's decided to build a big block of council apartments, and then it's having an exit trigger. What would make you sell that property?
Yeah.
Sell it quickly because it will no longer fit your portfolio.
Yeah. Yep. And even just like your Vermont one, you're at a different stage now. You don't land is great. We get it. It's always nice having that big block. But right now, it's sort of counterproductive to where you're headed. So you're going to shift it. Yep.
Exactly. Yeah. That's good.
Awesome. Good food for thought.
Yeah. It's so good to see you, Tab.
Oh, lovely to see, even if it's just virtual.
I know. Well, that's good for us.
If you're around in, when is it? June, first week of June.
Yeah, we'll be
Yes,
here.
we'll be here.
We are having this is, I'm recording it, so it may go live, but we're having a special event with Sammy. We're coming down. It's going to be live, clients, face to face, our first one. Yeah. So it'll be held, David's restaurant down in South Yarra. It's down a little side street. Off Chapel Street. Yeah.
David's, the Chinese.
Yeah.
I know the one. Yeah. Good place.
Yes, it'll be somewhere around there. We haven't quite locked on a venue. It'll depend on numbers. So that's going to come up real fast. So face to face.
I'll be there. We'll be there.
We'll be here.
That'll be awesome.
There's lots of work to do here, so we'll definitely be here.
Awesome. All righty. Well, thank you guys so much. Appreciate you sharing some of your story. I did want to dedicate this to Helen and Ian Morse, who I know kind of in that place that you were in a number of years back, where you're going, they've taken a year off. I've interviewed them for the podcast as well. And now it's that thing of what's their next step? Do they bite their bullet and go full gypsy, or are they going to have a base? And I think it's one of those things, correct me if I'm wrong, where it's kind of, you can't half it. It's kind of got to be the thing, or you find it a different path. Is my having the home and not having it rented, and it just adds another layer of complexity, doesn't it?
Well, everyone's different, Tab,
Yeah.
It's really individual decision, and whoever, whatever you're comfortable with, so that you don't need to blame it on something or someone, right? So take responsibility for your decisions and kind of go with it. Don't sit halfway on the fence, because you're kind of like, always worry.
Yeah.
But if you have your clear focus, this is what I want to do. That it's
Right.
much easier. I'll give this up. I'll give that up because I want that.
Best advice I've had for a long time, I think. I think that one nails it. So thank you again, guys. And and I'll be watching your journey from my office chair at the moment, and living vicariously through you.
Okay.
Big hugs.
All the
Thanks,
best.
guys. Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.